let's talk about Rivian. You
Okay.
had a big post on X a couple days ago, yesterday, about Rivian catalysts. So why
The
don't you break
six
it down?
catalysts I mentioned. Yeah. So that was a couple of days ago. And yeah, I mean, I continue to be excited about this company. I was just, the more I think about it, the more undervalued I feel like it is from my perspective, especially as AI and anything in that sort of like autonomy world continues to get a higher and higher valuation. Rivian is not going up along with them, and basically everyone is sort of like missing any capabilities from Rivian. So if they come out with their sort of AI and Autonomy Day in December, I think that could be an incredible catalyst for the company. The fact that they have cash to sort of like last them for quite some time, to give them time to ramp up the R2 production, could be another major catalyst. The R2 product itself looks fantastic. Like this is a great alternative to the Model Y. It looks beefier and like a stronger, like more outdoorsy Model Y type of
Good design
vehicle.
language. It's
Yeah.
funny. The Verge coined it as solar punk instead of like Tesla being cyberpunk. It's like more
Oh,
of a
okay.
like positive, futuristic kind of design outlook, which I love.
Yeah. The design is actually like it kind of reminds me a lot of Range Rover
Hmm.
designs, right? Like it's sort of like this sort of boxier, but like also hip looking vehicle, but that is very capable off roading, especially. And they're already very well known for off road capabilities, whereas like the Model Y, Model 3 are not off road vehicles, obviously. So the fact that this is going to be an off road SUV that, like also has a similar starting point, starting price could be a game changer for them. I mean, this could be a car where they can't keep it in stock. So that would be super interesting. I mean, like there's a lot of catalysts for it. So I continue to be excited for Rivian as well. But yeah,
It's fine. I don't remember if we spoke about this in the last episode or not, or whenever we brought up with Rivian last, but there was a moment in time a few months ago where I felt like, not that you were losing faith in them, but like you were kind of like a little bit more hesitant in that
yeah,
investment. Am I,
yeah.
I'm
So
remembering that correctly.
you are. At that time, they had not sort of like talked much about their AI and autonomy plans. And RJ now in interviews has talked a lot about it over the past few interviews that I've watched. So I didn't have this sort of level of confidence that they're on the right track with that. I was getting frustrated that they weren't making as much progress on margins as I thought that they should have been. Now, one of the reasons that RJ explained in another interview that I sort of like saw a post getting frustrated with them, uh, where the explanation sort of made sense, is that a lot of their contracts were made, supplier contracts were made during the supply constraints post COVID. And if I don't know if you remember, but basically the world had a sort of major supply chain issue that caused prices to
I
skyrocket.
vaguely remember this.
Yeah. So car companies got hit the hardest, and these guys didn't have, like, they basically announced and released their products during that supply chain shortages and ended up contracting things at way higher prices than they should have. And I think a lot of those contracts were expiring basically in the past 12 months. And therefore, they didn't have an opportunity to sort of negotiate prices earlier than that. So a lot of that now is in place. Now their biggest challenge is that they need volume in order for this stuff to make sense, right? So now that margins can be there, volume also needs to be there, and then of course people need to believe that the company is going to be around if they're making a major purchase after their, after their homes. Cars are their people's biggest purchases, and a lot of people don't even have homes. So for a lot of people, cars are their biggest purchase. So they don't want to invest in a car or in a vehicle where they don't think that the manufacturer is going to be around for too long. So that's important. I think building that confidence is going to come over time, and they have time to do it. So and if their stock price goes up, they can also sort of like solidify their future with additional rounds down the road as well if they need to sort of
Right, similar to what
build up
Rocket
their
Lab
cash
just did,
reserves.
right?
Yeah, exactly, exactly.
Yeah, it's
Speaking of rocket.
I heard about, the supply chain issues or, like, that they did some, like, subpar deals, due to COVID, and it's almost amazing to me that they're doing as well as they are with those bad deals for being a
Yeah.
brand new EV car company.
Yeah. So, okay. So here's two things that happened. One was way in their favor during COVID, which was this sort of exuberance of like prices just skyrocketing of stocks in general, but especially of Tesla. And therefore, the new Tesla competitor gave them this sort of advantage of raising money at 100 billion and then $150 billion valuations, where when they went public they were in that neighborhood of $150 billion valuation. So that totally helped them raise enormous amounts of money. So one of the sort of negative things that people often talk about with me is that they've burned more cash than any other car company. Uh, like Tesla burned 5.5 billion. These guys have burned 20 billion or something. And before they sort of started to become profitable. And for Tesla versus Rivian so far, and they're still not profitable. So they point to that as a reason why Rivian will never be profitable. Well, the times were different. They had access to more capital, and they were choosing basically to launch during the biggest supply chain shortage of our time. So
Right.
you, you know, uh, those problems were temporary, but so was the access to capital, which they took advantage of and capitalized themselves pretty well. And they were able to burn a lot of money. And they probably should have been a little bit more careful. There's no question about it. Like, I think to my taste, I would have preferred them to have been way more frugal with that money, which is, again, part of the frustration that I had with them over like roughly about a year ago. But then now I think they are being frugal. They are being super conscious. The R2 line, they're like designing it they have designed it from the get go to be positive margins from early on, where like the cost of goods sold is roughly one half of the materials themselves is roughly one half of the R1 line, based on some of the conversations that they've had in interviews. So. Uh, just looking at the future, this does not seem to be the same thing as the past in terms of how much cash burn they've had. Um, and and now they're not a $150 billion company anymore. So as a roughly $18 billion company, that creates an opportunity for investors, right? It's a lot easier to 10x your money when a company goes from 18 billion than it is when the company starts out at 150 billion. So
What's the plan for the R1 line? Are they gonna discontinue it when R2 comes out, or are they selling
no,
both together?
they are selling both. The R1 line has two products that their customers love. It's kind of like the Tesla Model S and X for them, right? Versus their R2 is their sort of like Model Y equivalent. Um, so yeah, no, they're not planning on discontinuing it. It's just another hopefully profitable product for them going forward, right? Like they just need to be able to make it in enough quantity for it to be profitable on a uh, per unit basis.